Global financial markets, including stock ones, opened a new trading weekend thereat. Donald Trump is starting a new chapter in the trade conflict with China. He threatened to impose tariffs on China as a punitive measure for the spread of the coronavirus out of a laboratory in Wuhan. Such developments forced traders to shift focus towards safe haven assets, so the US dollar is enjoying beyond the demand today. At the end of the last week, the equity market came under pressure due to the short-term factors like cautious sentiment. US stocks jumped at elevated levels amid fragile optimism on economic recovery and tepid macroeconomic data. However, investors stoked fears over the weekend amid a new wave of tensions between the United States and China. The two largest global economies found the worst moment to resume their trade battle. The thorny issue used to derail markets under normal conditions in the global economy, bearing in mind the events which happened over the weekend. This Monday could be the key to a further trend for stocks. Futures on the benchmark US stock indexes have lost almost 1% today. Futures on the Dow Jones shed 0.74% in the early New York session to trade at 23,407 points. The US dollar traditionally wins favor with investors as a safe haven asset in case of popping up new risks of escalating the current ones. The greenback lost ground against the yen but rose against higher yielding currencies. The index rebounded to 99 in the early morning with the prospects for a climb over 100 points in the short term. The US-China trade relations will pose the main risk to markets this week. Besides, investors are braced for the US non-farm payrolls for April, which are due on Friday. The market expects appealing figures. The unemployment rate in the United States surged to 16% from 4.4 in March, and the number of jobs in the US public and private sector stumbled to 21 million in April, following a decrease of 701 months ago. So there are no reasons for a broad-based positive market sentiment. The fact of easing lockdown measures is not able to prop up trading sentiment for long. Several states like Georgia, South Carolina and Florida have already lifted some restrictive measures. At the same time, consumers are in no hurry to resume robust shopping activity. Social distancing has not been cancelled yet. That is a nuisance for the services sector. On the whole, the prospects of a downturn in the labor markets in the United States and Canada are going to put pressure on the national currencies. On Friday, the USD pair spiked following the news on the appointment of the next Bank of Canada governor. Steve McLean was named the new governor. Interestingly, experts predicted that the senior deputy governor, Caroline Wilkins, would take the chair at the central bank. Today, the Canadian dollar is extending weakness like other commodity currencies. The USD pair surpassed 1.41, but in the evening retraced to the level slightly above 1.40. Crude oil is trading higher in the New York session. Both benchmark oil grades have gained over 2%. Brent crude is consolidating gains at around 27 US dollars a barrel. Analysts expect Brent to test the level of $29 a barrel. That's all for today. We keep monitoring the financial market situation. Subscribe to our channel and keep abreast of the latest events. See you soon.